Yo, welcome back to Dadvestor. I just wanted to make a quick video about rolling. Everyone knows what it is. If you don't, it's pretty simple. You just close an option and then open a new one, and they call it rolling because you kind of roll out of a position. But and the power of rolling and why it's awesome, it's kind of hard to understand. I think I didn't even understand it really until I did it a lot, and I was like, oh, okay, like it's just a good deal. Um, so uh, so I'm going to show you two examples. One's a good example where it's like in profit. So I'm just rolling. It's easy to roll because I'm closing a good position for profit and opening a new position that is also another profitable situation. But what if you wanted to roll out of rig? So for example, rig is a bad position, and rolling out of that would be okay. Like I'm trying not to lose money, right? So it's all about the net profit loss. So if you by rolling, you can essentially avoid losses. And it could go either way. It could be a put or a call. It can go with you don't want to own the stock. So for example, like let's say I don't want to own Coney. So I have this, but I'm getting crushed, right? My strike is $9, and the break even is $8, and the current price is $7.98. So if you don't know what that means, I'm going to sell because that's what this position is. It's a sell. I sold it when the price was up here, and then the price dropped all the way down and close to the red zone. So what that means is if things don't turn around, I'm going to end up losing this trade. But, I'll just own 100 more shares of Coney, improve my cost. It's not a big loss for me mentally or long term. But in terms of this trade, it would be a net loss. So let's say I didn't want to do that. How do you roll out of that position? So rolling is the reason why I like rolling and why everyone, especially like in Tasty Trade, promotes it is because when you roll, it's a simultaneous action. So the position is closed, the old position is closed, and the new position is opened at the same time using the same amount of capital. So that's why you can roll out of a bad position and make money. All right, so how does that look? So this is my position that I'm trying to roll. It's the $9 put, June 20. So you go to June 18. So what you want to look for is, okay, to close this position, I need to buy it for $1.08. So if I want to roll out for a profit, I need more than that. Now here's the magic, right? Because I still have, especially for this, like today is May 29. So we have like almost a month. So if I really wanted to roll this, like it's not even worth it, right? Because I still have 21 days to expiration. But even then, it's still a net credit. So the total credit at top is $42. So even doing like the wrong thing, rolling can get you, because you're paying time, right? You get money because you're sacrificing, right, that time. But that's an example of why rolling is so powerful, because even in a bad situation, if you make the wrong move, rolling can still help you. Now, what I would do if I was going to roll this is I would raise the limit price, right? So the limit price is how much money we're getting out of this. That's the estimated credit. By raising the limit price, it will balance the two positions to make it. So let's say I want 100. It's not going to fall through, but I could make this good till canceled a GTC order. So you go up here on the top right and you hit limit order. This pops up. You scroll down, you hit GTC. And so I can just have this living in the market. And the moment where there's a balance between the value of the old option and then the value of the new option, where I can make $100 on it, essentially the old position reverses and it becomes more positive, and then I can close it for a profit and then open the new one for a profit. Essentially, you can put these orders in and create this sort of automatic action. And then, maybe tomorrow or something, or later today or next week, it'll just happen. And then that's how I've been doing it. And yeah, so that's why it's so powerful, because it'll balance it for you between the current position and the new position. So essentially, like right now, it costs $1 to close the top position, but if Coney recovers after the distribution, after a week or two, after like 3 weeks, it starts to creep up because people want to buy more of it because the distribution was really good, which it was, by the way, or it will be tomorrow, because the previous distribution was like 60 something cents, and this one is 70 cents, so it went up. And I own 600 shares, so I'm looking to make kind of a lot out of this stock. So the cool thing is rolling protects you and allows you to get out without losing money. So let's say so that's the example. Like, I don't want to own Coney, or I don't want to own more because I just don't want to deal with it. I can roll out in time, and then my risk goes down because of that. I could also roll to a more favorable position, where I want to roll down and out. So I roll down to $8. So the Coney $8 put on the bottom of the new position, but then it would be a net debit where I have to pay. Well, I don't want to pay, so I'm going to do a different thing. Well, I don't know. I guess I don't know how to do that exactly. How do you switch it from debit to credit? Or I would just do like something like maybe that. Anyway, I'm going to figure that out. But that would be a good thing to do, is to put an order in and make it into a total credit, and then it wouldn't trigger until you're actually profitable. So right now, I would just wait until the position improves before you did something like that, or just roll out in time like we originally showed you. So rig is the one I really wanted to show. And yeah, we could go out in time. We're selling calls, so it's the opposite side. And so I could just go out in time, give myself a little more time, a little more breathing room, and I'd collect $15, get out of this position so I don't lose my shares of rig, and I actually end up improving my overall break-even point, right? Because it's in the new position, it's 16, so 266 would be my new break-even. And so if it stays below that point, then I'm just making money. Yeah. For closing, so silver, I already put a short roll on there, but I'll show you kind of what that looks like. So let's say I want to roll it. I guess I have to go back. Okay. Well, let's say I want to roll it, and I'll just cancel this. And first thing I would do is look at the average credit, $30. Current price is 10, so it's plus 20. That's why total return is plus $20, because the value has dropped. So if I wanted to roll it, I want to collect $20. I need to pay 10, and so that's the $10 debit. And then I'm rolling it next week, and let's say I want, this isn't great premium, and I guess kind of doesn't make sense to me because silver has been relatively volatile. I'm going to check the volatility here. So yeah, it's not that volatile, 18%. But let's say I don't want $6, I want more. So we'll pay 10 to get the 20 out. And then for the new position, I want to make, let's say, 0.2. Low fill likelihood, but the prices are going to improve, at least in terms of the old one, later today and tomorrow when it expires. And so I could have this as a GTC order and reasonably expect to be filled tomorrow. And if not, I'll just cancel it and see what the situation is. So that's rolling. I hope that makes sense. Essentially, it's a super efficient way to get in and out of positions and let the computers sort of get and not have to look at it all the time. But you can put the orders in, and then it'll do it for you. And as long as you understand more or less what you're doing with closing the old position and opening the new position, it saved me a bunch of times with volatile stocks. So I'm going to have more videos about this, especially with more volatile stocks. because I do enjoy that. And there's one I've been keeping an eye on, which is actually on the list in Discord. It's it's not listed here, but it's it's one of the missed ones. So missed you, the T-Rex 2x long daily target. So it's so cheap, and there is a little expense ratio, but because the volatility is so high, because it's like a multiplier, it's leveraged. Even with just like a day or two, you can make $13. And if I get assigned, then I can do covered calls. And so like I was thinking of buying 100 shares, selling the covered call here, and then selling a put here. And then every week I can do that and generate, whatever that is, like 30, $40, even more, depending on what happens. So I like the idea. We'll see what happens. But I'm thinking of actually just doing this. Might close something first. But yeah, so that might be a good option strategy. So anyway, I'm rambling, my bad. But I hope that makes sense. I made this for Mr. Disco, my dude. I hope that makes sense about rolling and how you can sort of mitigate the damage when things go the opposite way. It's not the end. Even like, look at this. It says negative 66%. I think it was higher than that earlier in this video, and it doesn't even matter because just wait a little bit. That's the other thing about my method is I do like to trade during the open and the close, because that's usually the point where you have a ton of volatility. And if it's not great, just wait a little bit because it'll probably improve. So I'm lucky where I can do that with my new schedule. But like you can see that, rolling isn't that hard now. So let's say I like rig, and I do actually. And the more I learn about rig, the more I'm a little bit interested. And you can see I can collect a good amount of credit there. But I'm going to increase the credit to 0.1. So it's not a high likelihood because it's actually a pretty good roll. And I'm just going to leave it there because this doesn't expire until tomorrow. And so I will let you know how that goes. And I want a credit, my friend. I want to be paid. It was multiplied by 3 because I have 3 contracts, because I have 300 shares. Okay. Once you get used to like the mechanics and what it like that everything's 300 or everything that's 100 times, it's pretty easy because it's just decimal place movement. So I understand like it being hard to understand. But let me know what is still confusing. I'm not the best teacher. I'm just trying to improve and trying to show that what I'm doing works. I'm trying to figure out what works. But my expression of that is impaired. So I totally understand. I'm not a great teacher. So let me know if there's like, hey, I totally didn't understand this, but I understood that. Yeah, this is a Discord exclusive, so it's not going to be public. But it is unlisted, so like you could share it if you want. I don't care. But the point is, it's mainly for the Discord community. All right, peace, y'all. Hope that makes sense.